Imagine a world in which taxes do not deplete your cryptocurrency profits. Imagine this now. XRP is now at $10 as a result. Sounds crazy, doesn't it? We're delving into one of the most heated discussions roiling the cryptocurrency world today. Would XRP and even Cardano leap to new heights if there were a possible zero capital gains tax? Stay tuned as we explore all the nuances and audacious forecasts that could make tax policy the hidden catalyst for the upcoming cryptocurrency explosion. Are you sick of phony gurus who pretend to be knowledgeable traders but never engage in live trading? I trade live on the second biggest cryptocurrency exchange, where results are unfake and everything is clear. I have continuously closed each month in profit for more than 440 days. My followers have made over 70% profit with only 4% drawdown in the last 90 days alone. Results that have been verified, not just claims. Do you wish to view my confirmed statistics? Start duplicating my trades for free right now by clicking the first link in my profile. The scoop is as follows. Recently, a well-known cryptocurrency analyst from the Modern Investor YouTube channel shocked X with a daring assertion. Soon, XRP might reach double digits. You heard correctly. Not only does he mention $10 per XRP, but he goes farther. This seismic shift's key? A revolutionary change in policy. Everything depends on a claim made by Donald Trump that cryptocurrency investments may one day be exempt from capital gains tax. Take a moment to process the information. It wouldn't be a minor adjustment if this were to become a reality. It has the potential to completely upend the crypto industry. Let's dissect it and examine the potential outcomes of this moonshot prediction. Tax on capital gains. Every investor fears the rain cloud. A portion is taken away each time you make a profit. Crypto aficionados may feel as though they are being held back by this burdensome burden. Now, picture a world in which you keep every dollar you make from trading cryptocurrencies. It's possible that more people will enter the cryptocurrency pool with confidence, keeping their coins longer and investing more money in their preferred projects. Sounds exciting, doesn't it? That's where the intriguing part begins. Rumors from the contemporary crypto community suggest that there could be a huge impact if the US government approves tax reduction. Imagine this. When the market becomes unstable, investors of all sizes will have one less motive to sell in a panic. They would be more likely to weather the storms and place their bets on the long-term growth of their investments rather than worrying about large tax liabilities. It might affect the course of events. Consider this. Demand soars, driving up the price of cryptocurrency giants like Cardano and XRP. Sounds crazy? Let's do some math for a moment. Some people would assume that XRP and DA reaching $10 is unrealistic, but is it truly possible? We can all predict the fervent discussions over market capitalization that will ensue. The problem is that it doesn't seem so hard when you consider the tidal flow of investments from both institutions and regular individuals, especially when you know that market capitalization is essentially noise. The actual game, demand, and supply. The amount of XRP available on exchanges has already started to decline. Imagine a future in which the capital gains tax, one of the largest obstacles, is eliminated. The motivation to invest abruptly changes from being alluring to becoming unstoppable. Is this the ideal scenario for a DA and XRP? Let's have a conversation. An increasing number of enthusiastic investors are prepared to make their first move. If only taxes didn't require them to forfeit a portion of their earnings. Do you recall the big clue that Trump's own son, Eric Trump, gave a few months ago? He proposed that cryptocurrencies based in the US might be eligible for specific tax benefits. And no, that wasn't idle conversation. It might be an early look at a much bigger scheme that would give US cryptocurrency assets like XRP priority tax status. In the meantime, cryptocurrency projects outside of the US may still have to deal with a high tax rate of 30%. Isn't that a huge disparity? It truly is a game changer when you consider it. Now, pause and consider the ramifications of such a change in policy. Imagine this. Knowing that their profits are safe gives investors confidence. That trust could set off a series of events. Increased confidence leads to additional investments, which in turn cause more money to enter the market. The outcome, prices begin to rise. For cryptocurrency, it's similar to pressing the turbo boost button. This might be the catalyst that propels XRP and Cardano, which are already taking center stage, to new heights. Here's the twist, though. This goes beyond projections and charts. It has to do with belief. Investors participate in the game when they have faith in the system, and they have a big game. We've seen it repeatedly in several industries. When a significant barrier is removed, participation soars, and prices soon follow. Naturally, big swings are nothing new to the cryptocurrency world. It's a volatile playground. However, it's also an area where a single regulatory or policy change has the power to drastically alter the course of events practically immediately. You may be asking yourself, why hasn't this happened already? It's important to keep in mind that cryptocurrency is similar to a high-stakes game of poker in that it involves risks, uncertainty, and circumstances that are completely out of anyone's control. Consider a capital gains tax of 0%. Doesn't that sound like a dream? However, it's no small task to get the regulatory and political apparatus to work together. It takes time for laws to take effect. The procedure is sluggish, disorganized, and prone to delays. However, the glimmer of such a shift has already begun to circulate among the cryptocurrency community, and this excitement is igniting genuine hope. Why then would this possible tax change be so significant? Indeed, taxes have the potential to significantly reduce an investor's sales. It should come as no surprise that you would reconsider investing if you knew that half of your earnings could disappear the moment you cashed out. Imagine, however, removing that weight. Opening a faucet that has been rusted shut for years is analogous to that. Investments begin to flow and all of a sudden, and that money must go somewhere. It will typically flow into assets that are already in demand, which will spur further expansion. Furthermore, this is more than a theory. We may see this trend again since we have seen it previously. It is based on sound financial logic. Consider conventional assets such as bonds and equities. Governments that implement tax cuts for particular industries frequently see a surge in new investment in those fields. The same reasoning holds true for crypto. One of the main obstacles preventing people from participating might be removed with a supportive tax policy. Furthermore, compared to more established markets, cryptocurrency is still in its infancy, so even a minor change in legislation might have a huge impact. Let's change our focus now and discuss the human aspect of this, because crypto is more than just numbers and regulations. People are the focus. It concerns the gamblers who have ventured into this unexplored financial environment with the hope that their risk will eventually pay off. A large number of these investors are not experts on Wall Street. They are regular folks who dare to dream large and are drawn to the possibility of life-altering returns. The prospect of a tax relief is more than just a new